I have made over six figures trading just by trading with one time frame. That one time frame being the 15-minute time frame. In the past, I used to trade the hour time frame, the 30-minute time frame, the 15, sometimes even the 5-minute time frame. And during the true early days, I was on the higher time frames. So this could be the 4-hour, the daily, sometimes even the weekly. But the reason I made the switch was because I wanted to make my trading super simple. I didn't want to have to filter through 5 different time frames to even see if there could be an entry for the day or not. I wanted to streamline my trading, meaning that I don't want to spend 5 hours a day staring at the charts and then being confused whether I should actually enter the position or not. I wanted to open the charts in the morning, like I've done this morning, and I'm able to see instantly if there's going to be a setup or not. And I feel like that is the main benefit to trading with one time frame. People get into trading to live the trader lifestyle, and that trader lifestyle usually in their mind consists of not being on the charts and sat at an office desk for 10 hours a day. But their trading plan, their trading strategy, and what they actually want from their trading doesn't align with their views on the trader lifestyle. So they become a trader to escape an office job, but they then end up working an office job, potentially doing more hours, but earning less money, especially during the start of their journeys. So I didn't want to do this. I wanted to be free with my time and my money. And by just trading with one time frame, it allowed me to do this. I'm going to go through the positives and the negatives in this video to explain maybe why you should make the switch. But obviously, if multi-time frame strategies are working for you, then there would be no reason for you to change. But it might be quite interesting to hear the positives and the negatives before you make your decision. So as I am pro one time frame, I'm going to go through the positives on what I've found over the past few years and what the people in my mentorship group have also found. I mainly teach one time frame trading, although I do have videos trading the 1 hour time frame and other time frames too in my trade breakdowns. And those guys are absolutely killing it too. So check that out in the description. So I would say one of the main benefits is the testing phase. When you are testing a strategy, backtesting in particular, it is very time consuming. And if you have to go through multiple time frames to just see if there's one trade, it can take quite easily a few minutes, 3, 4, 5 minutes per trade. And if you're trying to test, let's say 3 years, 4 years, 5 years of data, this can be very time consuming. So if you to actually find out if a strategy is profitable long term, it can take you a fair chunk of your time that could be spent on more valuable things. And when you are actually testing the 15-minute time frame with a specific time window in particular, the way that I actually do it, I have an 8 till 12 a.m. time window in the UK, and that is the only time I will enter trades on my personal capital. So when I'm clicking through that, if you think about it, 15 minutes candles, there's only 16 candles that I actually have to click through to see if there's a trade, and then I skip to the next day. So I can quite easily see, okay, is there a trade today? Boom, no, next day. That's how simple it is for me to test. Then once I spotted a setup, set a limit, let it play out and see what happens. But let's say I had to check the 30-minute time frame, the hour, the 4-hour, the daily trend, the weekly trend. It can complicate things where I feel like it's easy to make a mistake. Trading with one time frame, I feel like it's very difficult to make a mistake. You're only really focusing on what you can see the candles doing. And then you cross-reference with your trading plan or your trading strategy, however you have it written down. And then you can quite quickly, importance on the quickly bit, see if there's a setup. And if there is, you can set your limit or an alert. And if there isn't, then go about your day. Very simple. And that is how I want my life to be structured as a trader. And that is what I have set up. And it is working very nicely. Another main benefit about the simplicity of trading on the 15-minute time frame is that it's very easy to replicate my setups every single day. So I can go on the charts, look at my trading plan, look at the charts and see, okay, there's going to be a trade today, or there's not going to be a trade today. So I go and do other things. I don't have to be staring at the charts. I don't have to cross-reference different indexes or time frames to even see if there is a valid setup that's going to be present in the next 30 to 60 minutes, let alone the next 4 or 5 hours. I can tell that very, very quickly just based on what I've seen in the first few minutes of the session. And because it is so easy to replicate and because the checklist isn't 100 points long, I can do this every single day without making a mistake. If I only have 4 or 5 things that I need to look for, then as long as all of those boxes are ticked, I can enter the trade. If those boxes aren't ticked, I don't enter the trade. Whereas if you're going through multiple different timeframes and there's a long list of things you actually need to see and things that have to line up, you can be quite confused. It's probably the easiest way to put it. You could be confused and unsure on what you should actually do. And you can miss things as well. Missing things is never a good thing in trading. If you miss something on one time frame, you can lose and then thought you did something completely wrong, change your strategy, and then you realize, oh, I actually missed one of the 99 things I actually had to remember to enter this trade. And I would say the main positive is that there's no confusion in trend usually, because if you're trading the daily, the 4 hour, the weekly, the 50-minute, the 5-minute, let's say all of these are being traded in a combination. So you have to see something on one and then the next and the next. But what if 3 of the time frames are bullish, but the other 3 are bearish? What do you then do? There's some confusion there. Which ones do you rank higher? You have to make this decision before you enter a trade. And sometimes the situations are going to be quite different because no market condition is going to be identical to a previous market condition. Otherwise, we would perfectly be able to predict what's going to happen and increase our risk massively if we knew what was going to happen in the markets. But we don't know that. And just trading one time frame, I only have one trend to actually read. And if that's wrong, I lose the trade. But it's not a decision I have to make whether I follow another time frame or I follow this time frame, if that makes sense. Again, it all boils down to the simplicity of it. Very, very simple strategy, but we're now going to go on to the negatives. Coming on from the previous point I just made about trends, sometimes trading solely on the lower time frames, let's say 15-minute for example, you can get caught up in the bigger overall move. So what looks perfect on the 15-minute time frame can sometimes be a slight pullback on the higher time frames before continuing in its original trend. And you can get caught in this sometimes. But again, you just have to be prepared for this. You have to realize that trading on a lower time frame, some people would say 15 minutes is a high time frame if they came from the 1 minute time frame, but people on the 4 hour would say 15 minutes low. I would say the 15 minute is a low time frame. And I know that you can get caught in trends that are not showing on the 15-minute time frame. So I actually trade a 4 hour strategy too, but they're completely separate. They're not combined at all. And I've noticed that it's easier to follow the trend on the 4 hour time frame strategy because you're seeing the whole picture. Whereas on the 15-minute, you're not seeing the whole picture. And sometimes this can be quite confusing. Going back to a positive based on the negative, you can catch the small moves. So a pullback on the 4 hour where you're waiting for an entry, it might miss your entry and then drop to your take profit. But on the 15-minute, you can catch that full move because 30 pips on the 15-minute is quite a lot, but it's not on the 4 hour time frame or the daily time frame. So you can catch these small moves and make profits on them, but it can also work the opposite way, and those small moves can actually stop you out before heading in its original intended trend. And this can be quite annoying for some people when they're seeing other traders, for example, trading the higher time frames, riding the trend down, and then they're losing money on the lower time frames on the smaller moves in between. But you're also going to have the opposite of this, where they're not able to follow the trend and you're making money on these small moves too. So you kind of have both sides of it, but that can be a negative to trading one time frame on the lower time frames. And one that people seem to struggle with, and this is trading during volatility. So I trade with a fixed stop loss size. This is just based on data. Let's say price is extremely volatile. So there's an election or certain things are going on in the world. Volatility increases means that that fixed stop loss looks absolutely tiny, but you have to trade it. Because let's say I was trading on the higher time frames where my average stop loss is, let's say, 100, 150 pips. This usually is not an issue because 150 pips is, again, quite a lot for a trade. But this is only an issue for me because I have that fixed stop loss. If I didn't have that fixed stop loss, then it wouldn't be an issue. But because this video is about my experiences with the lower time frames and trading just with the 50-minute time frame, this is an issue because you're only going off what you see on the 50-minute time frame. Whereas, let's say I was trading in combination with the hour or the 4 hour time frame, I'd be able to say, oh, well, the range is a lot bigger. We're getting bigger moves here, so I can change the entries I'm getting on the 15-minute time frame. This could be something that I could add on if this was a recurring issue in my strategy. However, it's not stopping me from making money. I'm passing challenges, we're making profits, so it's going to be absolutely fine in the long term, but it is just something to be aware of if you are using fixed stop losses on the lower time frames, because there are going to be times where that stop loss seems massive because there's not much volatility in the markets. So 10 pips seems like a huge amount, and it's like miles below the low or above the high. And there are also going to be times where that 10 pips doesn't even cover the high or the low. So these are things, again, you have to be prepared for if you do try to trade like me. But there is no strategy that has just positives, and there's no strategy that is all negatives. So you have to kind of weigh up, do the positives outweigh the negatives, and is the profitability there? If the profitability is there, but there are still more negatives, then you have to, again, evaluate, are those negatives changing my trading for the way I want to trade? If the negatives for my strategy were that I had to be on the charts, sat at my desk for 8 hours per day, that would be too much for me. I don't want to be doing that. That's not why I got into trading in the first place. I want to limit my chart hours. And by having a strategy like this, although it has the negatives like any strategy does, the positives vastly outweigh the negatives. So I'm going to continue trading solely on the 15-minute time frame. And be sure to let me know in the comments what time frames you guys trade, because I don't really follow people on social media, so I'm not aware of the time frames that people are trading in 2025. I have experience in 2020 seeing various people's strategies, but yeah, be sure to let me know in the comments down below, and I'll catch you guys in the next video.